You are that childcare provider who is so terrified that the tax season is upon us. It is now here. You're afraid for two different reasons. Number one, you're afraid that you're going to owe in taxes like you did last year. Number two, you're afraid that you're not even prepared for the tax season. You don't have your documents together. You're all over the place. You're just not prepared. If that's you, I'm so excited to speak with you. My name is Donna, for those of you guys who do not know me, and I am a child care CFO accountant. I help child care owners increase their revenues with strategic financial management, and I also assist the child care provider with saving in taxes so that you can use that extra money, sometimes 100,000, sometimes 50,000, depends on your tax situation. You can use that money to put back into your business and to grow your business. So let's talk about the top three tax strategies that you can use this tax season that's going to help you save significantly in taxes. That way, you don't have to be afraid to file your taxes and you don't have to be afraid of owing more than your fair share in taxes to the Internal Revenue Service. The first thing that I want you to write down as a top three tax strategy savings is going to be depreciation. Depreciation is not talked about a lot because it can be a complex subject if you make it complex. But the way that I'm going to explain to you, it's very simple. What depreciation is just that you taking a fixed asset, that's the accounting term, but a fixed asset is anything that you own as a business owner in your business, such as any type of playground equipment if you are a child care provider. Notice that I keep saying owning. These are not things that you're renting, but if you're owning, even if you're paying a mortgage on these things or you're paying a loan on these things, and after those payments have been made in full, you'll own it, you'll know that those are particular things that you can depreciate, which means that going back to say playground equipment, any type of facility equipment, any type of business vehicles that you may have for your business, any type of fixed assets can be anything, guys. It can be any type of furnitures that you may have in your homes or in your child care centers. All of these things can be considered as fixed assets, and you can depreciate fixed assets only. Okay. Now, how long can you depreciate these things? That depends on what the IRS regulations say that you can depreciate. Sometimes some of these things are 5 years, 7 years, 27 years, 39 years, depending on what type of asset that you have. So, just keeping things in jargon's terms, let's just say that you are a childcare provider and you purchased a van in 2025 and you want to depreciate that van to get a higher tax savings. Okay, so what you're going to do, you jot down how many vans that you purchased and you let your tax preparer know this, and they're going to be able to depreciate these vans for you on your tax return. And depending on if they take bonus depreciation, which is speeding up the depreciation, or if they depreciate this particular asset over the 5 year time frame, I'm specifically talking about vehicles, over the 5 year time frame that the IRS allows you to depreciate that vehicle will depend on how much you're going to save in taxes. But either way that you do it, whether you accelerate the depreciation by doing bonus depreciation or you just simply do the straight line depreciation over the 5 year term that the IRS says that you can depreciate business vehicles, you're still going to save in taxes. But you, as the business owner, you must inform your tax preparer that, hey, I got some business vehicles that I would like to depreciate on my tax return this year. If you have bookkeeping, this should already be recorded in your bookkeeping, and you can simply give your bookkeeping financial statements over to your tax preparer and they can simply put it on your tax return that way. This is going to help you significantly save in taxes. And this is so important because year after year, I see providers skipping out on this, not because sometimes it's not even because you guys don't know about it, it's because you're not for sure how it works. No one explains to you how it works. So, you know, understandably so, you shouldn't have to take things to your accountant and say, hey, is this something that I can do? More than likely, typically, an accountant is supposed to bring these things to you and say, hey, we can depreciate this on your tax return to get you a higher tax savings, which will lower your tax liability for whatever year we're in, right? So that's one thing. Depreciation is a big thing that I see overlooked. The next thing is going to be cost segregation. Now, cost segregation, it is an accounting term. So This is the importance of having an accountant so that they can break down these terms to you. But cost segregation is a huge tax savings. So, for instance, a lot of times, childcare providers, you guys don't just rent your business. Now, yes, some providers rent their buildings, you rent your homes and things like that, but everybody does not rent. So, if you're not renting your facility or your center, this goes back to what I was saying, things that you own. If you're not renting these things and you are paying a mortgage on them to one day own them, after you've paid that however year long mortgage, 15 years, 30 years, guess what? There is something called cost segregation, and you're able to cost segregate. This is a study that has to be done by a qualified professional, but you're able to cost segregate things inside of that particular facility. For example, let's just say you have kitchen appliances, you have dishwashers, you have refrigerators, you have cabinets, you have windows, you have just things like that. You're able to take, instead of you depreciating that particular house over that, let's say 27 and a half year or 39-year life, you're able to accelerate your depreciation by doing a cost segregation and depreciating the components, the parts of the facility, like I just named, like the dishwasher, the refrigerator, things like that. These are some of the same things that are in childcare centers as well. There are washers, there are dryers, there are what we call deep freezers, there's refrigerators, things like that. This is something that you should take to your accountant, or your accountant should be speaking with you about, is a cost segregation study. If you've owed taxes in the past, you've had this huge tax liability, this is something that can definitely significantly lower your taxes. Okay. So right now on your pen and pad, you should have depreciation and you should have cost segregation written down. Big, huge tax savings. The third thing that I want you guys to write down with regards to tax savings, I want you to write down payroll. What I see a lot of times is that as a childcare provider, you guys are not paying yourselves correctly. Could be number one, you may not be structured correctly, right? Let's just say, for an example, and I love to give examples, let's just say your business is set up as a single member LLC. If you're making over a certain amount of money per year and you're set up as an LLC, more than likely you're paying way more than you should in taxes. Okay. I'm not going to tell you to convert to another business entity. That's something to be discussed with your accountant. But I will say that that may be something to look into if you find yourself owing a huge amount at the end of the tax year. I see all the time it's because people are structured incorrectly. And when you're structured incorrectly and you're trying to pay yourself via payroll, you end up paying more taxes than you intended to. So, this is something that's very important and that definitely needs to be researched and discussed. Because, like I said, there's so much education out there. You can get on YouTube all day, but until you sit down with your accountant and discuss the ins and outs and how it works for you in your facility, you're never going to grasp it, to be honest with you, right? So you need to first decide that, hey, am I structured correctly? And if I am structured correctly, am I paying myself correctly? There's so much more than to, I know S Corps are very popular nowadays, but there's so much more than just forming as an S Corp. Whenever you form as an S Corporation, for example, there are different upkeepings that you have to do to be formed as an S Corp, which means that you have to have monthly board meetings and all of this stuff has to be documented. There are many things that you have to do to retain an S Corp status. So don't just get into an S Corp just because it sounds popular, just because it sounds fun. You need to understand the benefits of it from a tax standpoint, and you need to understand the nuances and the housekeeping that needs to be kept up with whenever you're forming as an S Corp, if that, if that's an entity that you have to form in. Either way, payroll, again, is another thing that I see that's making you pay more than your fair share in taxes because your business entity structure is set up incorrectly and you're paying yourself incorrectly, which means that a lot of times I know providers who are just paying themselves a salary or just paying themselves an amount without actually doing the research. Okay, based off of the duties that I perform in my business, what is a salary or compensation that is commensurate with my duties that I'm performing. No one's looking these things up. They're just going off the top of their head saying, oh, I think I'm going to pay myself this amount in salary without understanding, okay, can my business actually afford to pay me this amount per month, every single month into perpetuity or until, I no longer have the business? These things are very important to consider and to think about and to talk about with your accountant. So let's go over them again. Depreciation is number one, cost segregation is number two, and payroll is number three. These are the three tax strategies that can save you so much in money if done and executed correctly. Now, if you're that childcare provider and you just need assistance with this, you're saying, okay, I don't have anyone to help me, I don't have an accountant, tax preparer, whatever the case may be, and you do want some help with this particular subject, there is a link below this recording. Go ahead and click the link and book a free 15-minute strategy session, and we'll reach out to you to assist you and to give you guidance on what you should do to start implementing these tax strategies so you can stop paying more than your fair share in taxes to the IRS year after year. Thank you. Looking forward to speaking with you soon.